Trickling in.
Oh, that was fast. Hello, everybody. I'm Bonnie Halper. I write the weekly Startup One Step newsletter, and I also work with entrepreneurs when they need help with their executive briefs or their pitch decks, because none of you know how to write a pitch deck properly, and I know Cris will agree with me on that one. And we hope every other week we host a small online breakfast with one investor and a small self-selecting group of entrepreneurs so that everyone has a chance to participate. And I want to thank WorkChew for hosting us. And Christine, you want to tell people about WorkChew?
Hi, WorkChew partners with hotels and restaurants across the country to provide remote workers with safe working spaces. You're able to book individual seats, private meeting space by the hour, or guest rooms for day use workspaces.
So Cris Haskell is our guest this week, and Cris is an investor and one of those crazy serial entrepreneurs. He can't stop starting companies. And Cris also was co-hosting my or co-modding my Clubhouse rooms, and we'll start them again, but we'll probably start them on LinkedIn. And Cris, would you like to go around the room and have everybody introduce themselves so that you know who's in the room? Yeah, and tell briefly what they're doing, or do you want to talk about yourself and your background?
For sure, and thank you, Bonnie, for the opportunity to hop here and talk about things that we talk about all the time, but share some of those insights with the rest of the folks. And I can't wait for some of the questions that you guys will ask. My background is very much in consumer packaged goods originally. So I grew up in the consulting side and then worked around the world in US, Asia Pacific, and Europe for companies like Kraft, Heinz, Reckitt Benckiser. Then got involved in, I would say, more lower market private equity type companies, and ran a few businesses there on that front. When I stepped away from that, I jumped into the good old technology side, i.e. tech. And for the last, I'd say, 7 or 8 years, I've been focusing on that space and learning the ins and outs on that front, doing a bunch of advising, consulting work that led to running a supply chain AI company, and stepped away from that about a couple years ago. Hence my foray into angel investing and becoming an LP in a couple of VCs that I'm a part of, and learning a lot about the investment side and the requirements that how we kind of look at stuff for investments, not only as an LP in VCs, but also I'm in a group of investor group, and then I also invest individually. And then, of course, Bonnie, like you said, there's something about us fellow entrepreneurs that have just got that itch, that against the grain mentality, or we just like pain for no reason, and want to commit our time and energy to building something with fellow like-minded folks. So I've been doing that for probably the last 1.5 years or so, and I think at the end would be great to chat about that a little bit. But primarily focus on some of the questions and stuff, all topics angel investing today.
Okay, so I'll have you guys introduce yourselves. Matthew, you want to introduce yourself? And don't forget to mute after you speak, because we keep hearing your background noise. I guess he's maybe frozen.
Good timing. I'm jumping over a fence, this stupid gate here. Anyway, whatever. It's in a park that I live in outside my
Matthew,
complex.
just introduce yourself, please.
I know. Sorry, Bonnie. Jeez.
Oops.
I'm a startup.
Oh, you froze. It's that new phone thing.
Project, and one private equity project, and one consulting business that I run myself, besides jumping fences on a normal basis. All tech agnostic. Right now, the large project is focused on solar, green tech, and blockchain as well. On the other hand, my consulting business is 100% tech agnostic. I'm open to any opportunity in any tech field, because that's just the way it always has been in my career. Again, I have focused primarily on green technology. That's me in a nutshell.
Okay, thank you. So Alicia, you want to introduce yourself? Oh, there you go.
Hi, my name is Alicia Overton. I am here in Chicago, Illinois. I am a business operations consultant, and what I'm doing now is my own startup. I've created a 4-in-1 monthly planner for entrepreneurs because I was sick of everything that was in the space. So I am working on that is the project that I'm currently working on. I'm marrying a planner with technology, and so I am happy to hear all things startup because it's a new area for me. So I'm excited.
Well, Alicia, you're coming in a little
thank you.
low. My
Yeah,
apologies.
yeah,
Could you speak up
Yeah,
or
you-
get your mic close to you?
yeah, that's true. So,
Can
Baram, you
hear-
want to?
can you hear me now?
Much better.
Okay, so sorry about that. I'll make it quick. I'm in Chicago, business consultant. I have a startup that I'm working on. So I am happy to be here to hear the conversation.
And hopefully participate as well.
There you go.
Baram, you want to? If I mispronounce your Bahram, I apologize. Do you want to introduce yourself? You're muted right now. Bahram?
Yes, hello. Sorry. Yes, my name is Makrom. I'm the founder of the Admeal startup, and this is Admeal. This is the recipe marketplace for food bloggers. So we help food bloggers to monetize their recipes. So right now we are trying to expand to USA market and then to run this platform. And he's my co-founder, Pavel, also with us.
Okay, thank you. Oh, it says K Dama. I don't know what the K, and you're muted right now. K?
Yeah. Hi. So, yeah, I sold my digital marketing agency, which I founded 10 years ago. So I'm trying to figure out what to do when I grow up. So I'm just trying to figure out what I'm trying to do. But I did have a question for Chris over there that all the VCs or angels always say they want something innovative and stuff like that. I always wondered why. Why not just copy a very successful existing model? And I never quite understood why you always want something innovative. But hopefully you can answer that question.
So we'll do quick introductions first, and then you will get that first question. Okay.
Okay. I said I sold my digital marketing agency. I'm trying to figure out what to do my next stage in life.
Oh, isn't that a lot of people's problems? That's Chris. He always seems to have
Yeah.
something up his sleeve.
Pivoting is definitely an issue, but you'll get over it, buddy.
Yeah. Karishma, you want to introduce yourself? And you're muted right now.
Hello. Hi, can you
Hello.
guys hear me?
Yes.
Hi,
Here, you can't see you.
I apologize. I just went on a morning run and didn't get back in time to shower. So don't look camera appropriate. But Chicago-based SportsTech founder, so pretty much on brand. Would love to connect, Alicia. Always looking to connect with other founders in the area. I am building smart apparel, integrating hydration sensors into functional athletic apparel to essentially monitor hydration and improve performance for the endurance athlete, as I am an endurance athlete myself, so very familiar with the market.
Good for you. KJ. Who's also muted right now. Okay. Queen, I know how to pronounce your name now. Queen, do you want to introduce yourself?
Sure. I am on my backup laptop. I hope you guys can hear me.
Yes. It's soft, but yes.
Okay. Yeah. I'm going to try to speak a little as loud as I can. I'm based in Guelph, Ontario, in Canada. I'm a startup founder working on pets lost and found social platform using machine learning to identify animals and to read the emotions. Right now, we're at a researching phase at a local university, and working on dogs and cats with about 95% accuracy, and we're going to be progressing to the next phase, which is full body recognition and then emotions recognition before we move to other animals. And I'm going to incorporate all that into a social platform so people can interact within it. So that's what I do.
Oh, thank you. Orlando.
Me, sure. Hi, Ronnie.
Hey, how are you?
Hi, I'm good. Yeah, it's been quick. My name is Sean. I'm co-located between the UK and the US. I'm actually in England right now, on my way to do some fruit picking. But I'm a venture capital scout. Outside in, I basically find future next generation technologies, and then basically connect them to investors across a range of verticals: modeling, simulation, training, defense tech, game dev, medical, health innovation, aviation, space. And then inside looking out, essentially what I do is, I help entrepreneurs, innovators, founders, like startups, but we're basically with fundraising strategies to scale their business. I guess my secret sauce is that we're very kind of proactive, very active in developing strategic partnerships between the UK, US, and Europe. And as a consequence, I strongly believe that we're kind of best placed to arbitrage the value proposition, probably a lot better than most of our my peers and competitors. So, thank you.
Thank you. Pavel.
I've practiced it. Okay, thank you.
Hi, everyone. Yeah, my name is Pavel. As Bahrom mentioned, we're working on the same startup called AdMeal, where we figure out the way how to connect the food influencers with the customer to build the perfect shopping experience connected to delivery. And yeah, speaking of my background, it was mostly in product management in the startup environment, and most recent Mars Pet Care as a director of the product management. Things I can help with and happy to chat with is any kind of the product management, ideas or whatever you're curious at. Speaking of the models of B2B SaaS or marketplaces, happy to be your partner here.
Oh, thank you. Sam, we haven't seen you in a long time. How's it going? And what tell us about Axel.ai.
Chugging along. We grew about 50% last year. We have 33 full-time people now, and we're getting some bigger contracts, which is exciting. Basically, for those who don't know, our company does software for managing and helping people repurpose large amounts of media. We exhibited at our first VidCon last month, which was exciting, got into the creator economy a bit. And we're going to do another equity crowdfunding raise in about 60 days. Plus, we have some interesting further growth opportunities. So anyway, keeping very busy.
As you always do. Tara, who I met yesterday on Lunch Club, and welcome.
Thank you. It's excited to be here. Hi, my name is Tara Tadroswayhill. I'm originally from New York City, but I'm based in Istanbul, Turkey. My background is that I'm a photojournalist and I still work for places like the New York Times, but I'm also a visual storytelling CEO. I have my own creative agency where we help teams devoted to social impact tell their stories better. I just finished up a great project with the International Rescue Committee and Sesame Street to help them with their Ahlan Simpson program in the Middle East, helping kids become ready for school and how their team can all be better storytellers, which has been an amazing experience. My agency, we create stories for you, but we can also teach you to do it as well. So the entire team is empowered to create impactful visual stories. And these days, everything is visual. So it doesn't matter what story you're telling, it should have visual attached to it. So I'm looking to find people who are ready to, be more effective on telling their stories online authentically and ethically. And if I can help in any way with things for your, just like thinking about that, I love brainstorming. So please, yeah, find me also on LinkedIn. I'll put in my, although I'm very easy to find with my last name, but yeah, I'll put it in the chat.
Everybody should put in their LinkedIn contact if you want to. So Vlad, tell us what you're doing.
Hi, I'm Vlad. I live in New York, and I'm a user experience designer and product designer by trade. I work as a consultant with various companies, and I'm also an angel investor. I'm a member of a network group, angel network group in New York called 37 Angels. So
yeah, I know Angela.
Yes. Okay, so I primarily invest through 37 Angels. Every 2 months, we have companies pitching, ranging from coffee and falafel companies all the way to artificial intelligence. A wide range of companies. I personally try to invest to companies that have some kind of a tech angle. Just something that I like, is something that I understand better. So that's quickly about me.
Oh, thank you. Zarin, I guess you're still in Istanbul, usually based in Geneva.
Yes, I'm usually between Zurich, Geneva, and now staying a bit in Istanbul, where I'm originally from. I have private banking background, and currently I work with companies for business development and capital raise. They're mainly focused on data analytics, including crypto, e-commerce, and 3D streaming.
Oh, thank you. So we had a question. You want to introduce your question again? Not that we hit the Q&A portion of our show. Who was it? Was it Kay who asked the question to Chris? Who just sold his company and is now looking to figure out what he wants to be when he grows up? Hello?
We can also hear you, Bonnie.
Well, that's a good question, actually. We
Yes.
Yeah, great question.
It's already asked.
Is Chris still there? Chris?
I'm still here for sure.
Oh.
So you want to answer the question?
Okay, what was the question again?
I think it was I know. He was asking.
I think he was asking why people always ask for innovative ideas and not duplicate something that's already successful.
So yeah, so great question. But first and foremost, how cool are all your backgrounds and where you guys are focusing your energy? Like, what a great variety of different backgrounds and interests from what you guys are doing. So thanks for sharing all of that. That was super interesting. To answer the question of, why do we look for something unique? I mean, ultimately, we're trying to gamble on a higher return. And with the limited funds that we budget for each year, if I have 5, 10 investments that I make, or 20 with lower check sizes, I want to make sure I'm getting the biggest bang for my buck in the shortest amount of time. And by doing that, you're also weighing the opportunity cost of where you could put that money if the idea isn't, or the momentum isn't big enough to supersede investment in equity, bonds, private equity, other alternatives out there that we look to diversify our investments in. So it's not necessarily always the biggest unique idea, but it's something that there's a vision and there's momentum, or there's an early stage founder who has the foresight and lived and breathed this a couple times that you're essentially gambling on. It's either the idea that you hope is big, or the entrepreneur who's been seasoned and who's kind of failed numerous times to get to that point where they can see around corners themselves, or have the foresight to include the right people on the advisor board, or just the right early stage employees that are joining the company?
Hey, Chris, I'm sorry, my computer froze up. I'll tell you where I'm coming from. So we are creating a neo bank, and we already landed a huge customer, 100,000 employees. And then, so, no VC wants to invest, because if you just think one customer, you're not going to, it's not going to be much, 100,000 customers. However, our plan next step is to create like a MBAS, mobile banking as a service. But to get to that stage, we may need some money, but most investors would not want to invest at this stage. Like if you're profitable just with one customer, they really don't want to invest. That's where the disconnect. There's nothing innovative what we're doing. That's what I find the disconnect.
Right. Well, look, the fact that you landed a customer like that large,
and without building anything.
Well, I was going to say, like, landing a customer that's a committed customer through an LOI is one thing. Landing a customer that is paying you on a monthly basis for your service is a different thing.
Yeah.
So landing that customer, starting to build something, get engagement, get feedback, to actually now build a proper solution that you can use them as your use case or word of mouth is very different, right? Like you've been able to do the hardest part of getting a customer committed to what you're focusing on, but building something now where they actually tangibly use it is a whole different conversation. You have a lot of folks in the room today who are UX, UI, who are product, who are tech focused. Like, I'm telling you something from a trial standpoint, awareness, here's what we're doing, but on the repeat and then engagement or interactivity with the actual product, we're not there yet, which is two different things.
Well, I guess the point I'm going to make is that, and I'm sorry to dominate the conversation, was that the solution's already there. We're just putting the pieces together. So whatever, when we pitch to the VCs, there's nothing innovative what we're doing, but the bigger plan is I know how to put the pieces together. That's where I find the disconnect. There's nothing groundbreaking what we're doing.
Right. So that's helpful to clarify. So I'd even step back then, forget the business for a second. If you're focused on raising money, I always ask the question of like, what's your investment strategy? Like, who are you going out to target? As you build a strategy for your business, are you doing the same to go out and raise funds? Fortunately, unfortunately, I've helped raise, with all the bigwigs, founders, SUSE, Google, you name it, all those guys. And the investment cycle is painful. You literally will be selling your soul for anywhere between 3 to 12 months. The quicker you can do it is also the time and effort that you put into develop a strategy to go out and see who you're targeting. So if you're saying VCs and you're just talking to any VC, like the first thing you should be saying is, hey, we're an earlier stage focused company. I only want to talk to earlier stage VCs. Our focus is on FinTech.
Can I interject for a second, Chris? My suggestion is, I've been a VC and I've worked with VCs. I continue to work with VCs, hundreds, thousands, whatever, just VCs. I feel like a lot of times they may say that they want innovative, the newest, and I feel like that's kind of promotional a lot of times. It's not necessarily that they want innovative, creative, amazing. I mean, who doesn't want a little bit of that? But at the same time, I feel like that's just like a flashcard, and it's like it's like a hey, here we are kind of way to get yourself out there a little bit more than where you are. If you need that. I mean, a lot of successful firms don't promote whatsoever, but then again, there's a lot of firms that do because they need it. So it's kind of that way, in my opinion. my opinion. Now that doesn't mean that they don't want that fully or anything, but at the same time, I feel like it's also just like a gimmick to get, people to say, oh yeah, that's me. I'm flashy. I'm new. I'm da-da-da. And a lot of times, some of the most successful VC projects I've seen are not reinventing the wheel at all, like not reinventing the wheel at all, just taking like one additional step or one additional product thing or one additional line or one additional, like one thing that could just change it a little. Like, and that's, I mean, technically that's innovative, right? Is it really that innovative? No, but is it technically innovative? Yeah. So,
well, they like differentiators.
Exactly. So there you go.
Next question.
Cris, and not to dominate the conversation now, but Cris, so you say you're primarily an angel, you writing checks up to like 200K? What's your standards? What's your protocol?
Yeah, so for individual checks, I'm anywhere between 5 and 20. My investment group consists of numerous folks where we'll collectively throw in that individually. So that can get up to 20 to 60-ish. And then as an LP, obviously you're tidying up for those wonderful each fund commitment and the capital calls, but also plenty of SPVs that they offer up, which is the benefit of being an LP in those VCs.
Cris, can I ask a question, please?
Sure.
So I'm curious, for industry agnostic investors, when you're looking at pitch deck, if there's still such a thing, when you're looking at pitch decks, I'm helping a friend with her startup and as well working on my startup. And we have heard more things about the pitch deck than the law will allow. First, it was Airtable. You need to do it on Airtable. No, don't do it on Airtable. Do it on Notion. Don't do it on Notion. Make sure you do it on Slidebean. Well, if you do it in Slidebean, you need to have exit strategy. Don't have exit strategy. So it is quite interesting. I have an investor that is looking to invest in my startup. And so he's been really kind in kind of walking me through it. What do y'all want? And I'm going to say it like my mama would say, what y'all want in that? In the pitch?
Great question.
I mean, like, what you want in there? Because there's too many conflicting stories. And what makes it difficult is if you're trying to share your business's story, if you're trying to share your startup story, and the thing that I've been trying to tell my friend is like, no one cares. We love that you sell the story. How are you going to make money? Which way are you going to make money? And how are you going to get to it the fastest, right?
Right.
So she heard, don't put the exit slide, your exit strategy in your pitch deck. Then all of a sudden she spoke to an investor that said, yes, put that in there. Yeah, yes. This is why I'm so happy to be in this room, because Cris, what y'all want? What y'all
Oh
want?
my God.
And I do want to, speaking of the exit strategy, and I do want to hear your answer, Cris, and I don't mean to interrupt. Investors are in the business of exits. Of course, they want to
making money.
Yeah, Cris, take it away.
I believe it, but ooh, that's all.
It's a must. It's a must. Anyway, Cris, sorry.
So Alicia, I think, is that all right, Alicia?
Alicia,
sorry. I'm going to tell you, it totally depends.
Okay.
Right?
Okay.
Everyone's going to give their own answer. Here's what I want to see. Here's the standard X, Y, and Z. Ultimately, I believe you should be customizing your deck to your audience.
Okay.
And if you do the research and you have your investment strategy in place and you're being consistent, just how you're trying to spend all your time and energy on getting your business off the ground, if you build a deck that is customized to your audience, you are going to appeal to that investor that much more and allow yourself to give yourself the best chance to move through diligence with them.
Okay.
So that's my initial take. Like, I've seen do it this way, do it that way. Bonnie has a great benchmark in how she's done it in her point of view. But ultimately, I believe you should have your point of view on how you want to pitch, but know your audience.
Okay. Well, I would venture to say, because what I know for me personally, we both have, we're both going into spaces. I know, at least for me, I'm going into a space where there's juggernauts in the space. And so what I'm bringing is definitely different, but I am bootstrapping, and I'm trying to bootstrap as long as I possibly can before I have to ask for anybody's money. And so the goal is that if I know that the technology that I'm building is what's going to help me get money, but that point of customizing the deck to the audience is perfect advice. Thank you so much for that.
Right.
So, and to that point, so back to my initial thought, are there industry agnostic investors still out there?
Yes. Me. Hello.
A ton of them.
Yes.
So
And I also want to,
Hi. We are here.
Okay,
We
so
are
then
here.
so then I'll be talking to you.
There you go. Reach out
you know,
to me,
I also,
please.
So
I also
Alicia, I will say, like, there are requirements depending upon where you are in like your stage. If you are bootstrapping earlier on, it's very important to think like, what am I selling or building that could turn into something in the future?
Oh yeah. Oh
So
yeah.
like for me, there's 10 slides that can be moved to, if you can get to 8 slides, you are a magician.
I'm at
If you
14.
can standardize eight slides and go through that. So like company purpose, what's the problem? What's the solution and why?
Yes.
What's the market size?
Yes.
Your competition,
Yes.
product,
Yes.
business model.
Yes.
If you have a good team, maybe you're throwing in team.
Definitely team.
Financials, depends on the stage, right?
For me,
But-
always financials. For me, always
Right.
financials.
a lot of
And
investors
then
like to see
the most
financials.
important
Yes.
thing for me is, what's your 3 to 6 month to-do list look like that I can hold you
Milestones.
accountable to see how
Milestones. Definitely milestones.
Okay,
Correct.
so then I'll tell you that I'm in my second prototype testing, beta testing for my planner, and I'm building a digital version of it. And there is a surprise piece of technology that I'm trying to find that, well, I've actually found it, but I just need to see if the company will be kind enough and they want to play in the sandbox. So yes, everything that you've described, I have. The only thing that I've been trying to find is market size. I think I'm still researching market size. And because I'm pre-revenue, most often that's a big deal for people. And so when you're
Sure.
pre-revenue, they're like, what's your traction? Okay, well, if I mean, that's all I can do is say that.
Yeah. Yeah.
So ergo why I've gone ahead and I've talked to vendors, I've talked to dev shops, I've talked to
Yep.
branding coaches, I mean branders. And I actually had a meeting with an investor, a very large investor in Chicago, and he basically said to me, keep it small, keep it pointed, and start and launch small, because that's where it's going to be helpful for me to build my traction. So everything you just said, I have. I think the only thing that would be difficult is financials. So Matthew, we'll talk.
Well, projections, but keep your projections. I always tell investors, under promise, over deliver. Under promise, over deliver.
Absolutely.
So, and don't give me some bullshit, 100% gain every single year. I don't want to see that either. That's just usually impossible, and it's usually bullshit. Just under promise, over deliver. That's
Okay.
my biggest piece of advice when it comes to projections.
Okay.
When it comes to financial projections, they really want to know how you're thinking and how you're looking at
Okay.
it.
Okay. Chris, you were, thank you. Because I swear I can't, if I look at, I have 2 versions of my pitch deck and they look different.
Should have like 5, by the way. Should have like 5.
And all I kept saying was, I was like, I need to be on this call because I need someone to say, just what is it already?
Audience.
Chris
is definitely right.
I hate to tell you, but we had an investor who spoke last year who said that, because somebody was talking about their pitch deck, he said, he put money into a company and they're going for more funding, and they have rewritten that pitch deck over 100 times. It is a work in progress. It is never finished. It's a work in
Never,
progress.
never. It's like a resume. It's like a resume.
Okay.
Yeah.
Okay.
But that's okay. You just feel, don't let it stop you from sending it out, at points where you believe it's sendable, like, you know what I'm saying? When you like, don't kill it to the point where you're like, oh my God, I just never send this thing out.
Well, to Chris's point about what should be in the pitch deck, my current, the one that I've spent the most time on, and forgive me, anyone that I'm taking up too much time, but the one that I'm working on is 14.
No, this is probably helpful for a lot more people than you think, but keep going.
So I have 14 slides. I have
Sure.
I have 3 business models that I'm launching in stages. And so the thing is that I want to show that so that you know that I'm thinking intelligently. Like, I want to prove the concept of my product first before I go off into the technology piece where I know where my bread and butter is.
We get it.
So that's why, but for pre-revenue, it's always a crapshoot. So it's like, how do you make a compelling story in your pitch deck that says, yeah, I know I'm not making any money right now, but if you invest in me, I guarantee you will make money. Like, I know.
Well, first off, never guarantee anything.
Yeah.
That's number one.
Okay.
But it's okay. I get what you're saying. I get what you're saying. I get what you're saying.
But you got to be confident.
Yeah. No, of course, confidence is huge, but never guarantee anything.
Yeah, well, okay, fair enough.
But I get what you're saying. I get what you're saying. And I think what you're doing is the right thing. Don't get too crazy. Don't get bogged down on over anything. That's also a big piece of advice, I would say, because I mean, you can spend months on a pitch deck and just get bogged down. It doesn't do what does it do for you? It just wastes up on your fucking time. Excuse my language. Basically, don't do that. Just I would say anywhere between 7 to 20 pages max. Longest pitch deck I've ever seen has been like 60 pages, which is insane. The shortest one I've ever seen is like 5 pages, which is also kind of insane. But actually, quite frankly, if I had to receive one or the other, I'd rather read the one that's 5 pages than the one that's 60. But that's just me. Everybody's different. Like Chris said, he's totally right. Everybody's different. And know your audience. Like Chris said, know your audience. That's really important. That is really important.
So thank you. So, anybody else have a question? And Alicia, if you have another question, that's fine too.
No, that was good. Thank you.
Okay. Next.
Hi, everyone. And just kind of going off of that a little bit too. So I've had the same issue, Alicia. Oh my God, I've done so many different versions of my pitch deck and pitched to multiple people. You get all this like saturated feedback. So I honestly just stopped for a bit too. I took like a 2-week break. I'm just like, I'm not going to take any more meetings. I'm just going to like reflect on like all the feedback I've gotten, redirected with just like what I saw for being the vision of Pulse, and then just kind of shifted that way. But this is a question for both Chris and sorry, is your name Anthony? I can't see the screen. Matthew, sorry, Chris and Matthew.
That's okay. Yes, I'm Matthew. That's okay.
So from like an investor perspective, when you've invested in founders, what has gotten you to that aha moment? And this is very broad, but if you could sum it up, like what has led you to that moment and you're like, it's that founder that I want to invest in. It's that idea that could maybe come to fruition, but I know if that founder can execute on it.
Yeah, so I think the biggest thing that I'll say on my side, there's a couple here, but the word chameleon is probably on top of my list. So someone who can shape themselves into different situations and environments, that can learn, be open to feedback, be able to listen to their team members and incorporate that feedback. Like, there's many things there that when you're going through diligence and you're trying to understand how someone's built and you're going to give them money, like, either they're going to be open to hearing feedback and understanding what they're doing right, what they're doing wrong, what they need to do more of what they're doing right, what they need to do less of what they're doing wrong. The word chameleon for me is something that is universal, that I look at entrepreneurs and the companies that I advise for. I will not like advise for them just for the sake of advising unless I see that attribute. And then the second one for me is you need to have your sales hat on. So like, if you can't go out and succinctly surmise your product or service to your audience, your targeted audience, and be able to sell it, you're in trouble.
Big time.
Because that's your baby.
Mhm.
And you're the one you're going to be the only person on the commercial side of the business that's going to be doing all these things, the sales, the marketing, eventually if you get customers, the customer care. So that sales acumen has to be embraced and understood earlier on in the game. And then ultimately the team that you're surrounding yourselves with, like you can have the best idea, but if you can't get stuff done and you can't show me that you've gotten stuff done, those are the key things there for me that I look at for more in an angel standpoint when I'm doing the diligence or I'm investing individually or with my investment group. If I'm the LP and the VC and tagging along in an SPV, I either I'm going to know the people that are recommending the company through the SPV, and I'm not doing anything. I'm just like, sure, you guys have done all the work. I believe in you. You've already committed to returns that we've seen before, and either I believe it or not. I won't always do them, but the majority of time I will, given where it comes out of that fund and where they are in that life cycle with more of the companies that are shining.
Beautiful. So, Chris, that was awesome. Very well said. I there's just only a couple points I can add because you covered almost everything. I think, and just to talk about like aha moment, I think for each person in each project, it's always been different. There's never like a recognizable aha moment that I'm waiting for. It's never like that. I wish there was, because it'd be well defined, it'd be easier to find, be well defined and easier to find. For me, it really just depends on the project, depends on the person. I'm going to say that when you have a feeling that this plan, what you have in front of you, with the people, with the plan, with everything that's right there, that this could work and it could work big if done well. I think that's the aha moment for me. And it comes in various stages. It could come in the first call. It could come in the first 15 minutes. It could come on the 20th call when you've already given money, and you're in planning stages calls with them, and you just an update calls, and then one reason or another things just click, like and don't get me wrong, you're gonna have various clicking moments. So I wouldn't say a clicking moment and an aha moment is the same. I would say an aha moment is like a revelation of a business, and it's a place where you could be like, whoa, this is definitely gonna work if 1, 2, 3 works. And the beautiful thing about aha moments also is their simplicity, their beauty in their simplicity, because it's never too complex. It's always just like, bam, that's what it is. And like, wow, we just got to do a couple of things and we're good. And it's usually just like that. So, and I got to say, everything Chris said is right. It surrounds team. It surrounds, the individual and their chameleon. And I like to say, wearing a million hats, the chameleon-like attitude, but also I like to say here in Silicon Valley, and probably from my influence in New York, wearing many hats, because you have to, as CEO of a startup, the CEO of a startup, one day you're the chief human resource person. Then the next day you're the chief investment officer. Then the next day you're the chief operating officer. Then the next day you're the chairman of the board. I mean, it's just, it's crazy. It's just, you're wearing and some days you're all those things, like, and that's just normal, and it's got to be normal. So again, I'm just adding flavor to what Chris said, really. And team. I mean, team. So important. I've never seen a guy honestly do a project on his own. By project, I mean like a successful startup completely on his own. It just doesn't happen. He always has somebody, even if he hides them really well, or even if he's in the background. I've seen a group of 2 do something amazing. I've seen that. Don't get me wrong, it's very rare. Usually the team is of at least 5 people. But I've seen groups of 2, 3, 4, even in between. And again, those are rare. Those are rare. Because
Okay,
then that means those two to four guys are wearing a lot of hats. So I know I'm going on. I get it. I get it. I'll stop right there. Last thing I will say is team. Okay, I'm done.
Okay, thank you, Matthew. Yeah, keep.
You're welcome.
Next question.
Thank you. I appreciate that.
Who has a question? And yeah, ask anything you want. It always helps the entire room.
I had the question. I mean, actually, some of the questions that I had in mind are answered. But I wanted to say, given your network and all these projects, what you can say was a successful startup, or more interesting, what were the future that you have decided or you have digested, reflected on, that made a startup very successful? And that you were very happy to invest with, like, so I mean, in a way that we looked at what could make a startup successful, but you know, with a solid example, what was it that you decided, wow, they had a great sales team, I don't know, they had a great plan,
Right.
you know, what was that factor that made it?
So
let me first asterisk my comment here on, I've been doing this for about 2+ years, and typically you see investments with an event, meaning an acquisition, an IPO, or turning into a lifestyle company where there's distributions and you actually see a return. You typically see that in 3 to 10 years. So I'm too early to give you a concrete answer on what that looks like. Matthew might have a different perspective, or anyone else who's doing investment on that front. But my expectation is the money that I'm providing, most likely all of it will burn because it's paper. Hopefully one of those happen in the next 3 to 10 years, because then you're seeing a big return from your investment that you're putting in. So what I've seen so far in companies who've matured along their rounds, their raising rounds, it's very much the maturation of their team, the things that we talked about that you look in earlier stage companies that we look in investments, but very much around product market fit, right? Product market fit and unit economics eventually become like how you're going to be judged, because it's very black and white. It's not anything having to do with team anymore. They all contribute to it, but the unit economics and your product market fit is ultimately how you get there. So Series A companies are at that point where it's like they're going down the road less traveled by, if they're able to take typically between $8 to $25 million on their round and figure out how they are building a scalable solution. And if they're successful coming out of a Series A company and they get to a Series B, they're now raising between $26 to $100 million, depending on how you're doing with that product market fit and unit economics. And it is
scalability.
It is hard to mess up when you have $26 million to $100 million. So there's an amazing McKinsey slide that I went to some event 4 or 5 years ago, but it showed the database that McKinsey had of 3,500 SaaS companies and the rounds of raising of where there was a drop off of how companies failed and how they got to IPO. And it is just, some of the stats out of that deck were just like, you just need to keep that in front of you. Like 90% of companies fail. 10% of those companies that have a down round could turn into private equity or a lifestyle company, but only 10% of those 10% are able to right the ship and get back on to a successful financing round where you're accredited in valuation. So it really just depends on where you are with stage, but the numbers are numbers. Like unit economics are unit economics, and making sure that you can build a scalable solution that you always hear VCs and investors say, hey, can we pour jet fuel down the funnel right now and see how this takes off?
I just wanted to add that, you can raise a lot of money and still mess it up. I have 2 words for you, Elizabeth Holmes. And she's just one. I wonder if you have a link to that McKinsey report that you can share with the room, Chris.
I was a bit shy to ask, but
I don't know if I have the deck somewhere, but I know I can try and dig up the one slide because I use that in many of the times where we were able to successfully raise around and embracing the good news, all the hard effort from the team. But then there's also the reality check of, okay, this is what we're up against in order to move the needle and know that reality check there is where we need to focus as a team to kind of figure out those obstacles or anticipate those obstacles so they're no longer obstacles.
Definitely. And if I could add, so I've been roughly in venture since about 2008. So that's 10, 12, 14 years, right? So, and Chris was saying that the average angel, you're looking at 7 to 10 years as a play. So let's say I've been in 1.5. And then venture, you're looking at anywhere average of 5 to 7. So if I was 5 to 7, it's more of like 2.5, 3. But whatever. Let's stick to angel, 1.5. And I've seen a lot of successes, seen a lot of failures, more failures than successes, honestly, way more. And if we were strictly to talk about successes, usually it happens, surrounding a couple of different things. Like Chris said, product market fit, that's huge, right? But you could also have the product market fit that's huge and just wrong timing. And I know that might not, that's a critical part of product market fit is time. But at the same time, everything can be right, but just, maybe you're fourth to the game and the guy that was third to the game just totally collapsed things. I mean, I'll give you a great example. I was with a venture fund, a late stage venture fund, and a lot of people in this call know the story, so I apologize for that, but a lot of people don't. We were number one to the market in what we were doing, but we didn't go public soon enough. The company that went public and was our number 2 and we were actually kicking their ass, the proverbial ass, was a company called Tesla. And we were number 1 to the market in every other way. We were pre-selling them, we were beating them in money gotten from the government. Our grants were like 50 to 70% higher than what they were getting from the government. And we were a company called Fisker. My firm raised approximately 1.3 billion, that's B with $1 billion in this company, all through rounds E through like S. We did a bunch of rounds with these guys, all for expansion. For not for R&D, way past R&D, all for expansion and then sales and then deliverables. Expansion, sales, deliverables, the whole freaking thing. And we were doing it. We were doing it good. But guess what? Tesla went to the market first and we didn't. We stupidly tried to time out a good market time to go to the market. And I'll tell you, timing out an IPO is such a fucking mess. And I know I curse lots, my apologies. Timing out an IPO is such a mess sometimes, especially when you're really overthinking it. Don't overthink an exit. If it's good, go for it. Go for it. Don't overthink it. And guess what? We probably had 20 to 30 opportunities of days that it was good. It was good enough. And we should have pulled the trigger and we'd be neck and neck with Tesla today. But no.
Okay, thank you, Matthew. Thank you. We have
You're welcome.
My friend Lior just joined the room, and I wanted him to introduce himself and talk about what he's doing.
Hi, Bonnie, great to meet here, and sorry for the late appearance. I guess I got the times wrong, although usually I'm in Israel, so I have a good excuse for getting the times wrong, but not when I'm in New York City. It is where I am now. So I'm one of the co-founders of Cognility, and we're doing a search engine based on an AI model that we created, which allows allows 2 main things. First of all, the search is not based on keywords, which is the reason for many of the inadequate search results that everyone feels when they search inside sites which are not Google, not through Google. That's one thing. And the second thing is that we incorporate also video and document viewers. So we bring the user directly into the right position in the video or in the document when he or she searches for an information. So that's a kind of 2022 search engine. That's our main differentiators between us and the other search engines that exist out there. So thank you, Bonnie, again, and for the introduction.
Oh, thank you. Do you have a question perchance, since you're here?
I haven't listened in enough to ask a question, so.
Okay.
Okay.
So does anybody have a question that they'd like to ask, Chris?
Yeah, I have a question.
Yeah.
A safe note versus a convertible note.
Oh, sure. Oh, what was your question?
A safe note, a safe equity versus a convertible note versus just getting a percentage of the company.
Well, what about it?
What do you do, and what do you? What's the best way to go?
Chris?
So it depends, right? Depends on where you are in the stage of the company and whether you're trying to formalize a valuation or not. Safe is the easiest way to avoid that and come back later on and avoid the conversation with VCs. And you see a lot of pre-seed companies do that. I think it's becoming less and less because there's such an unknown to it. But when you start valuing the company on where things sit, then you're going to be getting into the more of the convertible notes and establishing more of a 409A valuation that everyone knows is a common benchmark and reliable benchmark. I wouldn't say reliable, at least a benchmark in the market. My whole view on that is like the valuation game from an earlier stage company. It is such a crapshoot, and it is such a big perception of only to the investor community, which is important. But as you go out and anticipate what your valuation is, having done this a few times now, I'm not too concerned from my standpoint on what the current valuation is. It's more anticipating 2 rounds of where we sit. So you're building the right story to ultimately get to that road less traveled by. And people nitpick and, they'll say, hey, look, I want the same terms as the lead investor. When you're just tagging along at the end and you've been talking to that person for 6 months and all of a sudden they want to jump in. So I think it just depends on where you stand as a company and what your view is on how the company's valued and how important that is to you now versus how important it is to you as you move through the different financing rounds.
Yeah, thanks.
And I know a lot of investors hate safe notes. Which was started by Adeo Resti, which was only supposed to be for very, very early stage and limited basis. So I see Orlando has his hand raised. Orlando, do you have a question or a comment?
Yes, I do. Just regarding the last founder that spoke, I have a question regarding his tech. So he says that his innovation it searches for information, not using keywords. Can it actually search using screenshots like video and kind of camera? Because that's an area that I think would be interested to know more about if it can incorporate that kind of capability.
Thanks for that. Actually, it's a great question, but that's on our roadmap. We still don't search images. We only search text and transcriptions. That's what.
Right. Got it. Okay. Thank you.
Why do you ask that? Do you have a specific need? I'm just curious. Orlando.
Yeah, because I've come across a similar company outside of the UK that was doing something similar. If you want to connect, I can we can discuss that kind of
Sorry for
further.
interrupting you. Whoever has a dog or a cat, can they please mute themselves?
Yeah,
Sorry for interrupting.
it's me. It's me. There's two dogs having a fight.
Oh, sorry, mate.
So-
Oh, sorry, mate. I didn't know it was you. I'm sorry. I'm so sorry.
Yeah, I'm literally, my finger is hovering over the mute button, so I apologize.
Okay.
Not mute.
So I would love to yeah, if you could connect, that would be awesome. Thank you for that.
Yeah. So what's the name of the company? Is it? Are you on LinkedIn? Or?
Mike, I'll write you in the chat. I'll write it in the chat.
Okay, thank you. Thank you.
Thanks.
Okay, thank you. Next question. It's your stage.
So I have a
Nicholas, welcome.
question. I have a question for Chris. Chris, what are you looking for partners in any of your ventures, or are you open to join in on with anybody as a partner? And we could talk about that a little bit later, but yeah, just open to that question. Wanted to see what your thoughts were.
Yeah, so for sure, the area that I'm focused as it pertains to investing, for sure. Look, I've just become an LP in another VC for the first time. That just happened in the last 3-4 months. So there are budgets that I'm
Congratulations.
myself.
Congratulations, by the way. Congratulations.
Yeah, so I am conscious of that. I am very much in the VC fund land, very hands off, unless they're leaning on me for industry or sector experience. And that's typically where I get engaged or asked to help out on that front. And then the investment group I'm in, I feel like we've definitely pulled back in the last 3 to 6 months on our investments. More to see how our previous, I think maybe 15-ish investments are going to be doing with these rounds, upcoming rounds, which is true to the kind of the market where it sits right now, and everyone's kind of pulling back. So
yeah, the market right now is a little interesting. So I get it.
Yeah,
it's not your strategy. It's not your strategy to keep pushing, then you're not going to keep pushing. I get it.
Right. So like to do that is different where now I'm reallocating more of my budgeted monies into the SPVs that the VCs are offering up because they're more true and tested, where the investment in our group that we're focused in is we have expertise, but it's something we need to just be more conscious of given market conditions. Sure. And you're seeing that across the board with everything on that front. So I'm totally open to it. I think it just depends on what the vehicle is.
Okay.
And then a lot of the stuff that I'm working on in my new startup, so to say, is very much around partnering up and embracing more of a pay it forward mindset. So Beautiful. That's something I can talk a little bit at the end as we go through all the questions from the team, from the group.
Okay. I had a question. Since you're part of this new VC, what are you looking at as part of that group? What sort of technology, startups, whatever?
Yeah. So, and I won't say their names just because.
I didn't ask.
Yeah. So one is very much focused on Africa, Middle East, and they're very much around where a lot of the tech offerings that have launched successfully in North America or Europe, they're a cycle or two behind and seeing amazing success with where they've been able to grow. So those are anything within FinTech infrastructure. In Africa, I've learned there's a lot of cross-country boundaries that technology is overcoming, especially with mobile payments and how that's shifting. Same thing in the Middle East. social commerce is becoming very big in that area, but also in the US and North America, and how social commerce is getting integrated into more traditional e-commerce, where you're seeing more integrated offerings from service providers for brands, that you're seeing basket sizes increase dramatically. So that's within one fund. The other fund is more industry agnostic, but more founder focused, and where they're more going against the grain, so to say, and avoiding higher education. They're just trying to find founders who are visionary, who are experienced, and kind of going out and finding those companies to invest in anywhere around the world, and industry agnostic. And that is not my expertise.
Okay, does anybody else have a question? Because I would like Cris to talk about his new startups, since he did jump to the other side. He's actually involved in both sides of the table. I mean, I know what he's doing, and I want him to talk about the fact that he's got sales and early traction and the importance of that. Unless somebody else has a question first. Yes, no? Are you comfortable? Oh, Orlando, did you have a question? I saw that you unmuted.
No, sorry, I'm just trying to, I'm filling with my phone, my apologies. Yeah, okay.
Did you want to talk about your new coast, Cris?
Sure. And if there are any other questions on the investment side, happy to jump in at the end. So yeah, so the company that we're working on is essentially, it's the first true lead generation marketplace focused on growth stage companies, where we qualify lead intros provided by what we call executive advisors, which are the seller of leads, for cash and or equity participation with our partners, which are the buyer of leads. So for the first time, we're able to, what Instagram has done for influencers and helping them monetize their network, we're essentially giving the ability for individuals for the first time to monetize their individual networks for participation in cash and or equity, with legal agreements that we've signed up with our partners, or think partners being buyer of leads, which are typically software companies, anyone involved who needs to build pipeline or get qualified leads. So partners benefit is because we're free. They avoid paying lead gen companies, no longer need as many board advisors. They're giving away equity to build pipeline. Since we're free, they lower their CAC, increase their LTV, and extend their runway, as there's no overhead associated with the partnership. So to date, we've had some of the wins that we've had is we've built out the advisor network to about 70 plus advisors. Our partners that we're about to launch in the next month or two will get us to over 10 plus partners. And we have some early stage wins here. We ran about over $100,000 through the marketplace in one-time revenue. And we've generated about $4 million in pipeline for our partners since our soft launch back in March. And the forecast that we're estimating between now and the end of the year is between 10 to 20K in MRR on 3-year revenue streams. So when a lead is closed from an advisor to the partner, the marketplace takes in that revenue, and the advisor, just for an email introduction, just think about this. You know someone, that referral moment. Do you know anyone who does X, Y, and Z can make anywhere between $500 to $10,000 a month for 3 years, depending on the size of the lead? So giving the ability to now monetize their networks, and what SDRs do for one company, SDRs over time can do for many, many different partners when they're talking to the same client or end customer. Now they're going in and expanding their revenue because they've qualified them on 5 to 10 leads for different partners versus just one company they're working for. So like the gig economy model, where Uber drivers have now been able to go out and be more flexible with their income, ultimately we're trying to do that for individuals in that referral moment by driving awareness of our partners to our advisor network.
Great. And Chris, if I could interject, I'm also just me specifically, and I know we could definitely talk about this offline. Definitely want to book a Calendly with you, but at the same time, just for your edification, I'm looking for partners in two different ways. People that can bring me more deal flow, and I'll pay them directly as a consultant. Someone that can bring me deal flow, successful deal flow. And I'm also looking for people that want to potentially bring in investors. However, we don't really need that too much, believe it or not. We already kind of have all of our investors lined up for everything that we're doing, and for everything we're going to do. So it's a beautiful thing. It's like a good place to be at. But at the same time, you know, you never know when bringing in another investor might be a really, really, really good fit. If they happen to be a really, 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 really good fit, then and only then I'd want to have that conversation. So that's something that I'd like to talk about with you directly. And then anybody else in the call that feels that they can fit either one of those parameters, for sure.
So Chris, question, are you going to offer funding at some point, or are you going to not? Since you
Bonnie, that is a great question. And near and dear to my heart, because I personally think the VC model is broken. I personally believe the partnership model is broken. And I would rather have individuals, what we call advisors, have ownership in this company than rather go to VCs to ask for money. So if I can generate money based on behalf of people's network, why shouldn't that person own this company with me? So if the traction and momentum that we have as a collective with 70 plus advisors, and we're looking to build that out over the next 3 to 4 months, especially as we're adding new partners, I'd rather go to advisors and say, hey, what are you comfortable writing a check for? $1,000, $5,000, $10,000? You'll fall into whatever tier, but you'll own this company. If there's 70 plus advisors that want to just put in $1,000, that's $70,000 that can build a hell of a MVP. You can even argue $70,000 can get you to almost a V1 and where it sits. If you sprinkle that out where there's people putting in 5 to 10K checks, you're now getting well over to a V1. And if we're generating cash and participating in equity in our partners, the marketplace will be valued a lot more, because it's not just the valuation in the lead gen marketplace, it's the valuation of the marketplace and all the equity that we have collectively in our partners. So I don't believe I should ever be able to raise money with VCs. In fact, the VCs that I always run this by, they hate when I say this, because in 2 to 3 years, I will come to a VC and say, hey, I will do this for your portfolio companies. And immediately I can build 10 million in pipeline, and I will compensate all the advisors and asking VCs for money to do this on their behalf for portfolio companies, which really flips the script on how the traditional financing is done within the VC land.
It's beautiful. Kudos to you, Chris. Seriously, that's awesome.
So that takes time, Matthew, as you know.
Oh yeah. Oh, definitely.
Yeah. Like, this is when I
totally get it.
When I think I forget who it was, Alicia, that asked the question of what does the deck look like? I hope I never have to build a deck. My job My job is to convince individuals and partners to join this, because over time, SEO, the reliance on SEO, SEM, Google AdWords, Facebook AdWords, Amazon, all that ad spend goes away.
Big time.
If we can monetize that personal moment. There were some great stats. I think it was Clearbank came out with a study a few years back that 43% of all VC investment goes back to Facebook and Google in their SEO, SEM marketing efforts. So think about that. I raised $10 million with Google. over the course and time frame of the use of proceeds from that money, Google is getting back almost $5 million of the money they invested. And everyone knows the market cap valuation of tech gross sales. It used to be 20 years ago, 50x. Now it's more of a 10x. So that $5 million in sales to Google over 2 years is really $50 million in market cap. I mean, that is so smart. And VCs want to train you to invest in marketing automation, SEO, SEM, all that. And there's a foundational issue in how people have to rely on that information or that money from VCs to build their companies.
Well, yeah, but that's also the VC world convincing everybody that they need them. While meanwhile, guys like us and the people on this call, we're all smart enough to realize we don't need VCs. Nobody needs VCs.
In fact, Lil wrote in the chat, so cut out the middle person.
Yes, exactly.
The model could be very interesting to increase the sales and revenues and valuations of the startups as well, because all of these people have certain background and network in some areas, and they can work with those VCs and really increase the sales. That's what I try to do with a few companies.
Oh, definitely. Definitely, Zarin. You're right.
Zarin, that's a great comment.
Yep.
And I always say this to Bonnie is saying, if you're an earlier stage company, what amount, I would love to hear the feedback from everyone. What amount of equity would you give up in your startup for $1 million in sales?
Great question. Yes, I love this.
Depends. It always depends, right? Where you are, what's going on. Do you have any sales? Do you have, you're getting tens of millions of sales a year? You know what I'm saying. But it's a case by case basis is what you're getting at.
The marketplace can come to an earlier stage company and say, we can give you $5 million in pipeline sales. You're going to convert 20% of that.
It's freaking valuable.
What equity are you going to give to the marketplace?
You're right. It's an intangible question. It's hypothetical. It really depends, and I love it. I love this type of question because it is a case by case, and you will know off the top of your head if you're a founder and you're in a position like that. You will know like what approximate amount you give. You will.
And those advisors, whatever their industry, will have inside knowledge because, for example, I've been a relationship manager. I know the banks. I know the clients. I know what they're thinking. I know what they're saying in their pitch, but I also know the weaknesses. But I don't know in construction, for example, but somebody else.
So Zarin, that you're exactly right. And that's part of the underbelly of what we're building. I would rather have you have disposable income just on an email introduction than donate that money to Google, Facebook, these massive global behemoths.
Big time.
And ultimately, I'm not concerned about partners that would pay the marketplace $10 a month, $50 a month. These are higher ACVs, annual contract values, that will lead to a high amount of disposable income.
Yes, definitely. Great point, Chris. Thanks for bringing that up, bud. Seriously.
Oh, so Lil said, I prefer percentages instead of 1 million.
Right. Well, I mean, look at the parallel too, Zarin, Bonnie, like what amount of equity are you giving to early stage employees to build a product? Sure.
Which in my opinion, I believe they deserve a good amount. They deserve it, in my opinion. Yeah, everybody's different. It depends the situation. That's a very dependable question too, but in my opinion, in general, the earliest employees, especially if you can't pay them much money, they definitely own, especially if you can't pay them much money, they definitely are owed, a good amount of equity. Again, my opinion.
So we have a couple of minutes left. I wonder if anybody has one last question or if Chris has any parting advice, wisdom to share with the group. Since you, like I said, since you're doing both right now. Wearing both hats.
Yeah, thank you, Chris. This has been a great call. I really appreciate it. Seriously.
Well, one question, if someone wants to get involved or learn more about what Cris has presented, what's the best way, I don't know, to contact him or to learn?
Yeah, I can introduce you to. Or
Okay.
Chris, did you want to share your email? Because I know Zarin as well.
Yeah, so if you're exactly, Bonnie is the ultimate connector.
Oh yeah.
Beautiful part about this marketplace, because
Big
this
time.
is Bonnie's event and she introduces you, I believe through word of mouth and vouching for people that if Zarin, you ever provide a qualified lead that closes, Bonnie would get a lump sum or percentage of that.
Oh, that's right.
Beautiful.
I'm really happy to.
There you go.
But think about that. Like you through an affiliated marketing or partnership mentality, like there's interest like this. I'm not bringing in anyone who would want to be in this, like in this marketplace, who just like, well, they're like, we want people that are motivated, that are willing to put in a little time, take away 15 minutes of their Instagram time and replace it with a LinkedIn time. So Bonnie can, Zarin, Bonnie can give the intro there, and she knows she gets credit for it in her advisor profile.
Yes, and like I said, I could vouch for Zarin as well.
Awesome.
So we're just at the hour now. So as I said, any parting words of advice?
Words of advice. Woof. I'll try and make this short and succinct. If you're a startup, iterate, try and make as many mistakes and move quickly when you do. Like the more you can pivot, you want to be a pivot champion, and the more you can pivot in the beginning, the more you can find your product market fit, which is the end of the end game, right? Problem, solution, reason why. So as soon as you can get into that and be super focused and not go wide, but go deep, you'll be in a better spot as a founder and startup, either as a founder or an early stage employee.
Thank you so much. And everybody pivots. Remember that everybody pivots. So I want to thank everybody for being here, and I want to thank WorkChew for hosting us. Kristen, thank you so much, and we'll be back in 2 weeks with another investor. Actually, he focuses on a supply chain, which I think would be really interesting at this, considering what's going on in the world right now.
For sure.
Yes. So thank you, everybody, and we'll see you in 2 weeks.
Thank you, Bonnie.
Have a great,
Appreciate it.
thank you so much, Chris.
Thank you.
Take care.
Thank you. Bye, everybody.